This is your last chance to buy the stock SoFi before it has a unbelievable bull run to it. Just today, so much stuff happened. The CEO, Anthony Noto, bought $500,000 more of shares after buying $1 million of shares a few weeks ago. The reason the stock dipped and he was able to buy it was because this institution called Muddy Waters came in and released this fake report that SoFi is rebuttaling and is going to sue them for, saying that they had so much extra $300 billion worth of debt that they were not reporting on their financial statements. And after the report, this company was short and they said, we intend to start covering a substantial majority of our short positions. They are admitting a crime and that they use this as liquidity for them to get out of their shorts because they are so bullish on SoFi and understand this. Just go in here and look at this. Look how many extra shorts have been coming in these last days, just around this. This is just unbelievable in the time leading up to this. Muddy Water and them probably have been shorting this. They kind of realize that SoFi has hit a bottom and is going up. SoFi even came out and rebutted this, saying that they don't have a understanding of their financial statements and business, and they are going to explore legal action against Muddy Waters for accurate and misleading information. This is so bullish for a company. Whenever you see institutions come out and admitting they're shorting someone, it is at the end of the time they are shorting them. It's not at the start. And whenever companies close shorts and start covering, that means they're bullish on the company and do not want to be stuck in there. Combined with Anthony Noto buying $500,000 more of shares, this is so incredibly bullish for SoFi, who is down about 40% still from these highs, right to here. About almost 50% from their highs over 32 to 17.46. SoFi is going to have a crazy bull run, and we're going to give you all the details why in this video. Why we love SoFi, about their financial wheel, and what our projections that we've been preaching about this company for months and how you should do it. So first off, let's just get into some fundamental stuff. Whenever you see everybody shorting a company or everyone shorting the market, like you've been talking about, the put to call ratio, right? Just go back here into 2025 right here. Look at the put to call ratio is up here at 1.3, while the NASDAQ is out here having this horrible drawdown. Whenever everyone is super short on a company like they've been in SoFi, that's whenever you get a V-shaped recovery and the whole market runs up. Let's even go back farther in time into these years, right into the thing in 2022, whenever you're going to get an idea of how much, whenever you see, look at this, even up here, right here in the 24th, put to call ratio goes above 1.1. Look what happens. Market goes up, V-shaped, up, up, up. That's where you look at the put to call ratio goes to 1.2. Look what happens. Market rebounds up after this drawdown. That's what this call ratio is showing. And you want to be buying stuff whenever everyone's short and everyone's scared, because usually at the end of the moves is whenever the put to call ratio spikes up for a stock, for equities. And that is the best buying time, especially whenever institutions are so bearish on the stock and realize they messed up. They have to release some fake information and have legal procedures possibly and risk the SEC coming in to get them out of there and a company going against them. That's why we are so bullish on SoFi. We've been telling you the fundamentals are there and you shouldn't be paying attention to the share price. You should be paying attention and happy that you can buy more shares for lower prices, which is happening and which is what these institutions want to do. And they're trying to hoodwink you and lie to you so they can actually cover and make more money off of it. So now here, we're just going to run through our projections before we give you after that information that came out. We have other videos going more detailed into fundamentally wise, you guys can go and watch. But like we've been saying, they beat numbers. We love their management, and they have great balance sheets. Unlike this company says, where apparently they have $300 billion worth of dilution and debt that's not on there. That's not even true at all. This company is going to get legally in trouble, and we are going to benefit from it. And the share price going over $35 this year. That is over a double up from right now. So with our numbers we have, let's start with our base case. Net growth will be 75% for this year, and then 40% in the years in the future. Revenue is going to be a 30% at the top line. You're going to get a 0.68 EPS times a 50 to 60 PE ratio, gives you a $37 share price at the midpoint. 50 to 60 is very fair for a company in the fintech, even SaaS calling it, growing at these margins. And a 37 P ratio actually gives them a forward peg of under 1. So they could even have a higher P ratio and have even more upside just on a base case and nothing overvalued. Because obviously we know in the market, some stocks can sometimes get overvalued because the market swings like a pendulum, overvalued to undervalued and goes back up. At the top of our case, we have a $50 PT, which is a 3x from right here. This is if they put up a 0.74 EPS and they traded even a higher P ratio of 60 to 70 because they're going to be growing from 90% to 50%, 50% in the years coming, and they upgrade their guidance with even more of a top line growth, which just is even possible to happen because what have we been talking to you? Anthony Noto likes to sandbag, so they come in a beat. He even says that they go and they will do the worst case scenario they think with rate cuts, too fast, or rate hikes for them. So that's why they're always very, very good at beating. And then with our bear case, we obviously have them doing 0.54 and trading a very low P ratio, which with our bear case, actually, as much as we said this was made at different times, if you give it, let's just say you give it a 17 where the share price is at right now, you actually are still getting a 30% gain this year, even in our bear case for this stock. So that just shows you that this stock is so below its margin of safety that it actually is a great buy right now, bull case, base case, or bear case, and that's what you want, where you're not going to lose money on a stock. And if you do see some stuff happening, so you can cut it, and it's not going to go down much lower because it's already down 50% with better fundamentals, more trust in management. And that's exactly what you want to look in for a stock, because the market is silly sometimes. Stuff does not make sense all the time in the market. And you guys know that, we know that. It's the world. It's human psychology. Everyone has alter egos or other events that they have to fill, leading to shares being mispriced and giving you, a retail investor, an opportunity to spot them before the crowded trade in Wall Street happens. With our base case, we have Sofi by 2028 going to a $65 share price, which is a 4x from right where it is today in a mere 3 years. That's better than you're going to get. A 4x in the market, it probably takes you, 20 years to get there. Just think about that within one stock, one fundamental research that's undervalued with a great CEO. That's why we choose to do stock picking instead of index fund investing, because if you put in the work, you understand the metrics, you know the company and their fundamentals, and you can project the numbers using industry trends and overall market multiples. That is how you beat the market. That's how you beat Wall Street, and that's how you make generational wealth. To retire earlier, live out your dreams, go on those trips you never thought you could go on, join that golf course, get that boat. That's what we're striving for, but each day in, day out, it takes so much hard work to go and read the numbers. And look at our bull case. We have them going to a $100 share price by 2028 in our bull case. That is with them just doing a little bit better than they're saying right now whenever we know they already sandbag. So this could possibly happen. Obviously, those P ratios in our bull case, we go bull because we don't think that's highly likely to happen. But if you got even anything, a $90 stock from right now, you're having like a 5.5x, 550, 650%. You have a stock going up in 3 years. Is about 2 to 3 decades of gains that you never thought you would have made. That's why that's the power of compounding and understanding, where you put your money in and making good decisions based on risk to reward, where you're not taking too much downside, and you have to have trust in your CEO, your company, and the fundamentals, and do the deep dive to make sure your industry actually has prominence and people are going to keep using it. So that's our reasons why we are choosing Sofi. And whenever you see these reports, it's all short time noise, short time drops in the price, short time buys, short time people being negative, short time sentiment. Over time, the price of stocks always goes to the intrinsic value, and usually it actually goes higher than it before it comes back down to the intrinsic value if it was already too low before. Because once everyone realizes, hey, the stock's actually really, really good, let's get in on it, they bid it too high. But because we're value investors here, once we see the intrinsic value, get out, rinse and repeat, and find stocks that follow the same pattern. And it doesn't matter any market you're in. If you're patient and you wait and you do your research, you're going to find stocks that fit that trend. Now, maybe you're not going to find 20 baggers if you're in a raging bull market of 2 years, like you might find at the bottom of a 30% drawdown in a recession. But you can find stocks to get unbelievable gains and outperform the market by 2, 3, 4, 5, 6, 10 times if you're an intelligent investor and you stay smart with your risk and reward. Thank you for watching. If you guys like this, like and subscribe. And Go check out all of our other videos where we go into other great stocks that we like just as much as SoFi. And just stay committed to the journey and keep up the hard work.